In this video, let's talk a little bit about crude oil. I want to bring you down to a smaller time frame, but before we do that, let's just look at the daily chart. And you can see this market's been rolling through this beautiful Elliott wave over the last, it's been 6 months here. This is wave 1, this is wave 2, this is wave 3, and these, of course, are our counter waves in here, as you can see back in this region here, back and around in April. And then we came down to this final and fifth wave down in here. And we started looking for this little ABC pattern. Now this is very common for us to get a little A, B, C pattern before we reach up into the 1, 2, 3 retracement of this market on the longer term ABC pattern retracement. So that's kind of what happened in here. So what I want to point out is this nice little ABC pattern that's coming in here for the projection. This is the overall long-term ABC. We go from A, B, and then we project with Fibonacci the advancing market and out where we should or could anticipate where this market should go. And if you see 61.8, which is our golden ratio number, is almost exactly matching this high. So that's our first goal. We want to see this market kind of rise in price, and now it's not going to go straight up. It's going to come and kind of move through time, but it's going to come up, and our anticipation is sometime here. This is the October crude oil, and we should be rolling out to the next contract time frame here soon. But this is going into expiration, and just a little bit after expiration, rolled out into the next contract, we should be testing that previous B high. And so this is what we're looking for. We're still bullish on this market, anticipating a rise in price. If we break that high, there's a chance that we could go up and create that next high, which would be the 100%. Which, as you can see, would be up here testing this previous level of resistance. So we would have a nice little butterfly pattern in here, and this would be another Fibonacci pattern. You can see this would be our left wing, and then this would be our right wing down in here if this is where this market went. So this is kind of the anticipation of where we anticipate this market moving to through this little butterfly pattern, the Fibonacci pattern, and the continuation of the rise in price in crude oil going into expiration. Now let's drop down to a shorter term time frame, and I want to show you this on a shorter term time frame. We're going to go back, and usually we do the day trading thing, but this market's made this nice little ABC pattern on the day trading pattern. So I just want to point it out to you so you can be aware of this, and you can do this yourself when you're doing your technical analysis. And so this is our A, B, C pattern in here, and you can see that's kind of pointed out using the bulls and bears. The arrows in here indicating the market's moving through this ABC pattern. Of course, the C point is higher than the A point, which makes it the ABC pattern, and that's why we have it this projection into the bullish range. If this would have dropped down and C would have been lower than the A point, we would have reversed this and we would have projected lower prices. But because the C is higher than the A point, this is why we project higher prices. And so this is the ABC projection tool with the Fibonacci ruler. And you can see it just projected this thing and it followed it like a train on rails. I mean, it's amazing how often that works, and it's one of the reasons why I've become such an advocate for Fibonacci. Is this thing is just projecting this market and it rise in price just like we anticipated. And you can see that the entry points, now the point that I want to show you here, the most important point is that this ABC pattern went over several days. It's not just that this happened in one day, it happened over several days. And so this is looking back on Monday, which was a holiday, and so it was a little weak, but it still gave us this pattern nonetheless, and then we could project higher, and this is how we were able to anticipate today's rise in price. Now the morning session here that we're looking at came in after this yellow sideways time frame. If we come in with our bulls and bears and we turn on one of our filters here, you can see that we're going to pick up the arrows on the color changes on this bullish market. And so whenever you're in a bullish trend like this, you can turn on this filter in the bulls and bears, which gives you the arrows indicating that the market is continuing to rise through this uptrend. And those are nice indications of place that you can enter or re-enter into the market using the bulls and bears as a trigger. So this was a nice re-entry point for today's market, and you can see that this market continued to rise in price and giving us the 3 rally points. Here's our first drive high, our second drive high, and then this third drive high coming into the noontime session is getting a little bit weak on us, which is pretty common, pretty typical. But you can see the nice entry points here coming in off of the morning session, and then the entry or the re-entry point, and then of course topping out here with the third drive. And the last key indicator in here, if we look down here at the momentum indicator, you can see that we have a strong level of divergence coming in here. You can see that we have lower highs and lower lows here in the momentum indicator, indicating that this market is weakening, and as we have higher highs and higher lows in the price line itself. So when those two diverge like that and go in opposite directions, you know that this market is getting very weak and is going to be unable to continue that uptrend. And so that's just a quick look at crude oil on a longer term basis, multi-day trading basis, and how you can use the previous time frames to give you a little bit of information, insight into what you expect or anticipate on the upcoming days. And this is how we project with Fibonacci and look at the 3 drive wave pattern as we come up through these trends.